Welcome back. This is Shirley Davis, and I'm back to do another video. I want to welcome back all my subscribers and welcome to my new viewers. Thank you for taking the time to stop by the channel. If you're new, please click the subscribe button and the notification to get my frequent updates. Well, we're going to cover three stocks today, Apple, Tesla, and Bank of America. Some of these stocks report later this month. Apple reports on the 28th. And Tesla reports on the 20th, and Bank of America reports on the 14th. So that looks like Tuesday. Let's see, tomorrow's the 12th. Okay. Oh, sounds like it reports on Wednesday, the 14th. So reason why this is important is because this is the last earnings season of 2021. And over here, the definition on Investopedia says earnings season refers to the months of the years during which most quarterly corporate earnings are released to the public. Here's the quick takeaway. So that means January, April, July, and then October. So the banks sort of kick off this last quarter. We have Bank of America on Wednesday. We'll kick off, and then we'll start the cycle through. Like this week will be banks, and next week will be some banks, and then there'll be some industrials and some oil type stocks. And then the last, I guess last week or maybe middle of November, there'll be some tech stocks, So this is the last quarter of 2022. And after this, people will start talking about guidance for 2022. Okay, so let's get to my stock today, Apple. Let's look at the chart for the last 5 days. It's been under pressure. It was 142 on August 4th, and then it dropped. It dipped for a couple days, and then it came back up to 141, and now it's back up to 143, and it's falling back down to 142. But if you look at the last month, it has been down overall. So it came into October in a downward projection, as it's gotten down as low as 142, but it's really not. It's just down with a little bit of the bad news going about. But really for the overall year, Apple has been a good stock. It opened the year at 130, and it's up over 10% for the year. And also, if you were following the stock, you could have bought it on quite a few dips. So earlier, the first half of the year, Apple remained quiet under the radar at 120, 125. And then as the year's gone on, as we got closer to September, it's gotten to the $156 range. So I think Apple is in good shape for year to date. That's pretty good, 10%. And of course, the new Apple phone is launched, and it looks like it'll be a good buy for this Christmas season. Apple, again, has a 52-week high of 157 and a 52-week low of 107. And then I think, once Christmas sales go on and such, I think they'll have a good quarter headed through, November, December, and in January. But right now, it's a little undervalued. Apple is a great stock. It does have a dividend here of 0.62%. So I definitely would look into Apple if you have not bought them. But it's a great stock to watch, and it's been excellent over the years. If you can look back 5 years, the stock was trading at $30 per share, and today it's trading at 5 times that, at $140 to $150 per share. Okay, so that's my review on Apple. The next stock, Tesla. Tesla is a great stock. They look like they'll be reporting later this month. See, I think on the 20th. Yes, Apple will report on the 20th. So that looks like it'll be next week, not this week, but next week they're reporting. Tesla, as we already got the good news, they beat production number. They produced more cars and delivered more cars this quarter. They had shareholders day. So the stock hasn't done much over the year, but they do open the Gigafactory in Berlin next month. So that is good news. And like I said, they just had the shareholders meeting So that is great news for Tesla. If you look at this stock, the 52-week high is $900. Many people are projecting this stock to go well above $900 after the quarterly earnings are reported. Considering they made their sales goal. And I think this low of 379 is nowhere near going to happen again. But Tesla, it did very well this quarter. As I said, they made produced many cars and many deliveries. Let's see what else going on with Tesla. Let's see, Tesla stock is only worth this much, one analyst says. Insight. So Tesla reports on next week, the 20th. We'll see what happens on the call, but we do already know they beat the delivery numbers, and I really feel like they will reach this $900 per share within the next 3 months. Might be $850, but I think with the good guidance moving forward, and then what they did this previous quarter, Tesla will be ready for this $900 per share in the next few weeks. So that's there. And then the last stock I want to talk about is Bank of America. Bank of America is trading right now in the range of $40 to $45 per share. It's been pretty much, if you look at it, pretty much flat. So since April, it hit the $40 per share, and then it's bobbed up sometimes to 44. It has a 52-week low, $23 per share. But this $23 a share is really last year's share price. Considering over this last 2021, we've had so much inflation. So if you look 1 year ago, the stock was trading at $23 per share back in October. And if you look even previous to that, it would have been the same situation. The stock got to heights as high as $33 per share. And of course, we experienced a pandemic, and then it slowly crept up. But with the inflation, it really creeped past what it ever did before. So with all the inflation that we had this year, the stock really hit a new high of $44 per share, which is great. But I think with the coming news of the economy coming back together, more jobs and et cetera, I think we'll have a new price target on Bank of America. Let's take a look at CNN. What CNN forecast? Let's see, CNN. Bank of America shares. Let's see what the analysts say. Let's see what the bear case is. Okay, so the bear case is $34 per share, and then the bull case for Bank of America stock is $52 per share, which I definitely think with all the inflation going, I definitely think this is where Bank of America stock is headed. This is saying here 23 analysts offer a 12-month forecast for Bank of America. The median target is 45. It's already at 45. But I really think it's going to hit 52-week. It's going to hit this $52 per share as the economy comes on and more people go back to work. We still have a high unemployment rate. We've got over 8 million people still unemployed. And then also Bank of America made news this week that they will be raising their minimum wage to $21 per hour. So that is cool. Bank of America is doing that. So they do suspect that, the inflation is coming. And as you can see here on CBS News, Bank of America hikes its U.S. minimum wage to $21 per share. So there it is. Bank of America is raising their minimum wage. And I think they can understand Bank of America increased minimum wage to 21 as labor shortages push up. So this is actually a good thing, seeing the stock at $44 per share. But as this inflation comes in, the cost of goods and services, the banks will increase interest rates and they will begin to make better profits. So I'm looking for this stock to surpass this $44 $2.87 per share soon. I would suspect it probably won't be till mid-2022. But again, if you just look here at the forecast of 23 analysts, the bull case says 52-week high, $52 per share, while the bear case is $34 per share. These were the three stocks I wanted to talk about tonight. Was Apple, Tesla, and then the Bank of America. Again, this is the beginning of earnings season. Remember, earnings season is an important time for investors only who rely on the analyst review of companies' earnings and assessment of the intrinsic value of their stock. Okay, so this is the beginning of the last earnings season for 2022. And it also goes over some basic stuff people look at: EBITDA, and earnings before interest and taxes, the intrinsic values, determine the current market of the stock. And all this is important when you're looking at investing in a stock. If they perform well during the current quarter, and then they give good items for the next quarter. Okay, so I want to thank you for watching. Thank you for listening. Please like, share, and if you have comments, leave them below, and we'll see you on the next video.